Right, welcome to the channel. Today I'm going to take you through the Starbucks Q4 2025 report. The reason why I'm taking you through this report in a live stream, two things. First, this is my first good live stream. I have done quite a few, but since my channel is a beginner channel, I must admit that I'm learning. It's a learning process, but basically my channel is about investing for fire. And if you're new to the channel, welcome again. My videos are all about showing you my journey on dividends. So I basically buy dividend stocks from mostly the S&P 500. I have some stocks in Europe because I am based in France, but some stocks, not so many, because the US offers the best deals in terms of growth, dividend growth, as well as robustness and good volatility for other parts of my investment journey. So I invest in dividend stocks. I also invest in dividend paying ETFs, just like the ones you have in the US. There are some in Europe that are interesting with a high yield and high growth. And I also sell options on stocks. But today, what I want to take you through is the Starbucks 2025 earnings report. The reason why I start with Starbucks is this has been a long-term investment for me. I bought it a few years ago, and I have made some profit doing some trading, selling, of course, some covered calls on the stock. And if you're not familiar with covered calls options, please let me know in the comment section. Just let me know if you want me to do a deep dive on covered calls and how to make extra income selling options on stocks. But basically, Starbucks is a long-standing dividend payer. It has been paying dividends for quite a couple of decades now, and the streak of dividend payments is about 15 years, which is very good for a food and beverage company, and it's comparable to other companies like a McDonald's or Yum Brands or some other food and beverages companies, but it has seen some big headwinds in the past years. It had changed CEOs for a couple of times. It has expanded in China, but China economy is quite volatile and competition is also fierce over there. So this is the reason why I am taking you today through the Starbucks report. I'll start with the letter to the shareholders. So this letter was shared by the current CEO, whose name is Brian Niccol. So it's a fairly short text where he basically says that since he joined end of 2024, he has set this strategy called the Back to Starbucks strategy. He wants people, in a nutshell, to come back to the store. In the past, they used to promote the idea of grab and go. So if you're based in the US especially, you know that a lot of the people that consume Starbucks merchandise, coffee, foods, basically order online and they just park lots of parking lots in the US. They just park and go grab their drink or their breakfast before going about their day. But this apparently is not the best winning strategy. I don't know if it's something that's inherent to the idea or the context. But the reality is this CEO has said that he wants people to come back to store. Apparently, they have done some studies proving that if you go back to store, you consume more, you spend more time. And if you've ever been dependent on Starbucks, whether you are traveling or whether you wanted to spend less time at home and you wanted to just work or study or just chill somewhere outside, you usually would go to a Starbucks coffee, and over time you probably realize, just like me, that there are less and less outlets. This is a very big feature. I think it's very important to note that a company that invites you for coffee but doesn't let you charge your phone or your devices is not really inviting you to stay. So they really went the fast food route, and it looks like this CEO wants to bring it back to more experience and more time spent in store. So basically, what he says here, I won't make you read all of it, is that they have improved the quality of their food, they revamped their marketing, they stepped back from promotions and discounts, and they reclaimed their place in culture. Basically, they want to be a trendsetter in the food, beverage, and industries or spaces. They want to innovate in the menus. They say new flavors and health-forward offerings like protein. Very good news for the healthy people over here. So if you're joining the channel, welcome. This is my first official live stream on Invest for Fire. My channel is dedicated to dividends, and today I am taking you through Starbucks report. So he says also that they made tough decisions. They had to close up a few coffee stores in the US. I will show you the numbers in detail once we go through the earnings report. And he basically says he made people more accountable and really made sure that whoever makes decisions is identified so that the consequences can be clear for anyone who's not taking the right decisions. He also says that they have very good ambitions and strong ambitions for 2026. They want the coffee house to feel like the community's third place. So again, he wants to bring the community back in store and really ensure that Starbucks becomes again a place of reference for anyone that wants to spend social time. So without further ado, taking you through the fiscal 2025 annual report from Starbucks. I will just take you through some information about the board. I'm not sure that you hear a lot of YouTubers present the board of directors, but being myself part of a global company with an executive committee, one very important aspect of management is their age. Because when you have a management that is aging and reaching retirement, two things happen. The first thing is they kind of lag behind innovation. That's a very big problem, especially for industries that are transformed, and the coffee industry or the coffee shop industry is not an exception. With digitalization, nomadism, changes in urban life, and also changes in food and beverage preferences, you need to have people that are in tune with their time, that are not too disconnected from the population. Lots of Gen Zs, millennials, Gen Alpha, all these new generations that need to be understood if you want them to buy your products. So here what you see basically is that the CEO is 51 years old. It's a pretty good sign. He's not in his 40s, but 51 is a good age to still be interested and willing to hear ideas from younger people to then implement strategies that work. But it's also a good age because you have enough experience behind you to really know what works and what doesn't work, what has more chances of working in terms of company strategy. The CEO worked for many other companies. So of course he joined Starbucks. He has in 2024 as the CEO, 25 years of experience in marketing and operations. He worked for Chipotle, he worked for Taco Bell, part of Yum Brands. He also worked at Pizza Hut, another division of Yum Brands, and he currently serves as a member of the board of directors of Walmart. So very good experience, good track record, and CEO at 51. The CFO is 62. The COO is 55, so still some time to go there for the COO, not so much for the CFO. The head of Starbucks International is 52 years old. It's good. I think it's fine, especially that half of the revenue from Starbucks approximately comes from abroad. It just looks like this guy, I don't know about you guys. Let me know in the comment where you think this person comes from. But if he's a brewer, he's probably from the beautiful island of the United Kingdom, of Britain. Sorry for offending anyone who's not who's from the island but not from the UK. But Brady Brewer, very interesting name. perfect for a coffee house company, right? I think this name helped him a lot build a career in a company called Starbucks that sells coffee. But yeah, just for the joke. Very good age and hopefully some international background to ensure that this person is helping Starbucks grow. So you see what I'm doing here? I'm not straightly going to do like fundamental PE analysis and looking at how many coffee brands the company has and how many stores, etc. As an investor, this is something that should be done, is to look at the management, because when you give your money to a company to grow it, it's very important to know who is growing it and what their background is, how far they are from retirement, how close they are to reaching the goals that you want them to reach, and what track record they have. So very, very, very important to really go through this. Of course, not financial advice. This is all just for education and entertainment purposes. But knowing who manages the company is a critical portion of decision making before you invest in a company. So if you want to read more details, go to starbucks.com investor relations, and you can just read more details about every board member of the company. I just took you through a couple of them. And just for the fun of it, let's see where this Brady Brewer comes from. He joined Starbucks in 2001, served as CEO Starbucks International since April 2024, where he's responsible, blah, 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 blah. Let me just take in. His prior roles at Starbucks include senior MVP of customer experience, and before that, currently serves, blah, blah, blah. Yeah, we don't know where he comes from, but he has a lot of experience outside of the US, which is perfect for this role. Here, what you see is the revenue component. The number of stores, you see that in the US, 60% of stores are company owned and operated stores, and 40% are licensed stores. Internationally, it's pretty much the opposite. 54% licensed stores. So basically, Starbucks provides a franchise to other markets and only operates 46% of the stores outside of the US. And overall, 52% of the Starbucks stores are company operated, 48% are licensed stores. And you will see later that actually the company is making some moves there, pretty significant moves that we can look at together. Revenue from company operated stores, 83% of net revenue during fiscal 2025. The retail objective is to be the leading retailer for brand, coffee, and tea. Actually, if you're a tea fan, you know that Starbucks has some offer. Not the biggest one, but good quality. And I like that they always give you a second pouch of tea if you order a venti tea. And okay, so going down, company-owned store data. This is what I wanted to show you in terms of stores. The company has closed 620 stores in the US in 2025, bringing the total at just close to just above 10,000 stores. In China, the company opened a total of 415 stores. And if you go down, you see that they opened a net number of 146 stores in the UK. And in terms of number of stores, US is number 1, China is number 2, and then Japan is number 3 with more than close to 1,900 stores, followed by Canada at about 1,000 stores, and then the UK. So these are the top markets and the top countries for the company. In terms of product mix, beverages make up 74%, so about 3/4 of what Starbucks sells is beverages. So you see quite a high dependence, of course, but they're true to their proposition, which is to sell coffee, tea, and other drinks for people with a great customer experience in and out of store. The food is around 22-23%. So it has not changed much. And one question that you could wonder as an investor is it in Starbucks' interest to change the mix of products? Again, as an investor, it's not just about looking at charts, PE ratios, and just hoping for the best. If you really want to go deep, if you're very blue in your analysis and you want to know why your money could be growing in the future, this is the type of information that you could be looking for to make an informed decision. You can also look at what other companies are doing, where the trends in food and beverages are, and this is what would make you a real investor. And you see, the company really offers all the information that you need. All you need to do is to read it, or just take the text, plot it into your favorite chatbot, either a Gemini or ChatGPT or a Claude or whatever, and it can give you the answer that you would need to make your decisions. Licensed stores. The biggest market for licensed stores is still the US. I'm just looking here for China. I do not see China, and it's very interesting because what I learned from another source is that Starbucks is planning to do a joint venture with a local venture capital firm. I think it's called BOYU Capital, BOYU. And they basically want to do a 40-60 joint venture where Starbucks will own basically no stores. They will just franchise all the stores in China and collect a fee commission from the licensing of the stores. And I guess this is why you don't see I mean, I don't understand why we don't see the licensed store in China. Maybe the deal has not gone through. So I'm expecting that in the next quarterly reports, you will see the China line appear here. But the story is that today, the second market after the US is Korea when it comes to licensed stores. And I guess they may give the helm of the Chinese licensing business to the Korean team if there is no cultural clash between a Korean manager, maybe a Chinese operator or venture capital firm. So something to follow. So what I invite you to do, I may do it in the future too, is to come back on the channel and show you in another live stream the next quarterly reports, maybe 2 to 3 quarters from now, where we could see that the licensed stores in China and the effect that it may have on the company's results. So again, I'm showing you how as an investor you can really deep dive into a company and know how they operate and what their future may look like. If you're joining the channel, thank you very much. This is one of my first live streams. I am based in Europe, but I invest in all sorts of companies, ETFs based in Europe, growth companies, but also dividend payers like Starbucks, like other companies that I will present in the future. If you like the live stream so far, thank you very much for leaving a comment, dropping a like, following, subscribing to the channel. I'm very happy that I managed to do a live stream, and I'm really hoping that I will improve over time and bring you value so that you can make informed investment decisions. Of course, not financial advice. This is only for my entertainment and your entertainment and for educational purposes. It's just a way to build a community around the idea of investing and reaching financial independence and retiring early all together. So here is a section about the risks. It may sound boring to you, but risk management is a very big topic today, especially with such a moving and dangerous and uncertain world. So if it's too much text for you, what I would invite you is to simply just give it to a large language model so that it can summarize it for you to understand which risks Starbucks may be running into in the future. So let me just scroll down so I can take you to their results. So something I've never actually analyzed before is the properties used by Starbucks in relations to its roasting, manufacturing, warehousing, distribution, blah, 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 blah. This is very interesting. They give you the exact square footage of the roasting, corporate, warehousing, distribution centers. So you know exactly the real estate that they own. If you watch the movie called The Founder, you know, the one about McDonald's with Michael Keaton. I think that's the right name. Let me know in the comments if that's the right one or not. You learn about how McDonald's went from a simple burger and fries and drinks company to a real estate company. And I learned in that movie that actually, even as of today, McDonald's revenue is hugely based on the real estate business. They basically buy locations, and in the licensing or franchising agreements, they force the franchisees to actually rent the space or buy the space from them. So very interesting. I guess this is why Starbucks is giving the details about their square footage. Let me see how we can do a deeper analysis on this later on. And if you're interested, just let me know in the comment. I can get back to you. Or if you have any information there, please let me know in the comment section. All right, so something I went to the detail to show you like some ways to do a deeper analysis, but here let's go into the what interesting for traders and people that usually buy in the stock market is what is the performance of the Starbucks in the past years. What you see here in green is Starbucks. What basically if the stock was at about $100 in end of 2020, it has not moved much. So as of September 28, 2025, it's only at 110. So at a basis of 100, it only took 10% appreciation in about 5 years. Not great at all, especially when you consider that the S&P 500 more than doubled, the Nasdaq more than doubled, and the S&P consumer discretionary space increased by 65%. Does that mean that Starbucks is not a good investment? Well, this is what everyone should be figuring out for themselves based on their perception of the business, of the industry, and the operations by the board of directors. That I highly invite anyone to know better, to know that if you invest 10,000 or 100,000 or even 1,000 or $10 into a company like Starbucks, that you know who is managing your money. But long story short, what you see here, not great performance by Starbucks so far. So you could be wondering, is it the right place to park some or all of my money? Financial highlights for 2025. Total net revenue increased by 3% to 37.2 billion compared to 36.2 billion. It's a massive scale. Sometimes even countries do not manage to have such a GDP, but still it's a 3% increase in a market where companies that succeed and have good price appreciation usually show close or more than double-digit growth. Consolidated operating income decreased by 2.9 billion in fiscal 2025. So again, not a good news. And the reason is basically they say this is due to restructuring costs associated with the closure of coffee houses and simplification of the support organization. They say they did some leveraging, investment and support of back to Starbucks, which were largely in labor hours, approximately, blah, 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 and inflation. So they're giving very concrete reasons as to the decrease in operating income. And the question is, when we do another video in end of 2026, what will the operating income be and what will be the reasons that would explain an increase or a decrease in operating income? This is how investors invest. This is how they should invest. And this is how the decision making should be done. Diluted EPS. It's 1.63 compared to 3.31. This decrease was primarily driven by contraction in operating margin, including the restructuring we spoke about and the support of the new strategy, which is eating up cash. So what's interesting is that despite what they say here, that restructuring plus the back to Starbucks, you see that CapEx has decreased. So if you want to really know why this doesn't sound right, they say they're investing more in the company, but still the CapEx has decreased. What is going on here? I don't know yet, so I'm discovering this information with you. So what I can do, if you're interested, let me know in the comments. I can deep dive and really go line by line under CapEx to know what details of the CapEx we can have access to in their report and how much of this CapEx is important for the company future, how much is linked to the back to Starbucks strategy, and what impact it can have on the future EPS. And he says here, basically at the end, we returned 2.8 billion and 3.8 billion to our shareholders in end of 25 and end of 24 through dividends and share repurchases. So the company is starting to give less to the shareholders. The dividend growth has been very short. I think it was about 4%. So they still managed to increase the dividend, but Starbucks is doing less share repurchases. So here there is a gap of $1 billion compared to last year in terms of returns to shareholder. So very important to know, is this a red flag, or is Starbucks actually reinvesting in its capabilities so that it can return more to the investors in the future? Bear in mind, if you invest in the stock market, whether you are new or you have been investing for a long time, that first of all, the stock market exists not to distribute dividends only, but it's primarily a way for companies to finance their activities. So usually a company can finance four ways. Either they use their cash, either they ask for private shareholders, either they ask for public shareholders to give them money, basically to invest in the company and get shares, or they could borrow money. The stock market is just one way of financing a company. So it could be a good sign that the company like Starbucks announces, okay, we're distributing less because at this time we are in a building phase. We're not in a returning phase. So we're not here to only give money back to investors. We are here to actually ask for money so we can grow the company. If you see it this way, then of course you go invest, and I actually follow this logic as well. If I feel like a company is really making efforts and it shows in the numbers, but it also shows in the stores. Very good, very lucky that we can actually visit the stores at Starbucks and see the concrete impact of those investments in the stores. Well, then you can make an informed decision to buy or not to buy the stock, or to sell or buy options on the stock. So yeah, very important to read all this detail. You see, it doesn't take more than 10 minutes to go through the details to know, okay, these elements are important, this I will keep in mind for the future, and we can reconnect later on. You can read again later on to decide if progress has been made or not. Net revenue, see, you can, if you want to go more in details, decrease in the revenue from licensed stores, okay, red flag to keep an eye on, and then increase in the company-owned stores, plus this other increase. I don't know what the other is. Other revenues increased by 140 million, due for 84 million due to an increase in revenue in the Global Coffee Alliance and increased sales of cocoa butter to third parties. So here, basically, new information, and it warrants maybe another video. I can do a video if you're interested about what is this Global Coffee Alliance about, how can it help Starbucks increase its position in the market, and also what is this sales of cocoa butter to third parties? Is Starbucks starting a B2B business? Why is it not advertised that much? I mean, what is behind this? Is it just a way for them to secure supply of cocoa to sell both to end consumers like you and I, and also use some of the extra stock they have for B2B sales? To be confirmed. So if you're interested in knowing more about this, let me know in the comment, and I'll be very happy to do this deep dive, because I'm not sure that many investing YouTubers do this kind of deep dives and go in this much detail about the Starbucks business. Operating expenses, well, it has increased, and I'm just going here in detail. So basically there is an $892 million in the restructuring and impairments. So this is the major change compared to the past, plus actually a big increase in store operating expenses. So they say here that store operating expenses as a percentage increased due to deleveraging additional labor. So very good news when you think about customer experience, and increased marketing to increase the return to Starbucks strategy. And then I guess the rest is we already spoke about the major impact of the restructuring and the impairments. And net income attributable to Starbucks decreased from 10% to 5%, and the major change is the operating income that is impacting the net earnings. All right, so lots of information here. If you like the video so far, please let me know in the comments and let me know what I can improve on, because this is my first real live video on YouTube, and I'd be very happy to improve over time. So let me know how you feel about it, what information is useful, if I'm rambling, if this is all good and you're finding value in it. So very happy to have your feedback if you're still around. Okay, I wanted to go through one last thing that every investor should read when reading a earnings report. It's basically, it's coming soon. It's called the statement of cash flow. So balance sheet, here it is. So very important if you want to know how much stock-based compensation the company is giving, how much accounts receivable they have, how much account payable they have. This is the Warren Buffett technique of analyzing a company. I had some accounting classes, and I remember that it really helped me get a clear overview from a balance sheet and a statement of cash flow of the health of a company. I had some experience in auditing, and it's actually very helpful to understand how good a company is. And basically, this statement of cash flow is divided in three sections: operating activities, so all the in and out cash that movements that the company saw to operate its activities, and then the investing activities, and then the financing activities. Financing, basically either the debt that the company contracts, short and long term, but also the dividends that are paid, as well as repurchase of stock, etc. So you can really see a clear picture of the company's cash movements with the statement of cash flow. And basically what's important at the end is to have a cash flow that is higher than the year before, and a cash flow that follows the promise that the company gave in its 3, 4, or 5-year plan. So for example, if a company says that I want my cash flow free cash flow to be at 10%, well, it has to be at 10%, because if it's less than that, it is less than what the market is expecting, less than the promise that the company gave, and it is not good. So that's it. This is basically a summary of the earnings report from Starbucks, a very big document of 105 pages, but very, very important to go through information like this one. I'll just give you a small opening into my holdings. I own 100 shares of Starbucks as of today. My cost basis is $96.49. The current dividend yield is 2.68%. It was 2.54 yesterday, but because the stock has decreased in this week, well, the dividend yield has increased. The dividend growth has been okay. So the past 10 years, you see it was 11.3%. The past 5 years, 6%. The past 3 years, 4.71%. And the past year, only 1.22%. So a clear deceleration of the dividend. But the company is doing its best by reading the earnings report and by also doing dollar cost averaging. Well, you can decide whether the company is an interesting investment for you or not. And just to show you another way that you could be making money on Starbucks, well, I don't know why it's not working, but basically also what I want to show you is that the payout ratio is pretty high at 172%. Another way you could be making money on Starbucks is to take advantage of the volatility. I don't know why my Interactive Brokers account is not working, but here basically you see a lot of spikes up and down, up and down, up and down. And the next level for an investor to generate extra cash while investing in a company is to sell options on a company. I can do a deep dive later on. Let me know in the comment section if you want me to do a specific deep dive on the options landscape for Starbucks and how much money you could be making if you own 100 shares or more of Starbucks and you want to generate extra income. You can see on my channel another video that I made on Qualcomm and how much cash you can generate selling monthly covered calls on Qualcomm. So if you're interested, feel free to visit my page and go on that video that was published a few days ago. So very happy to do a deep dive on Starbucks if needed. But that's about it. I think I'm going to stop here because I have to go get to my day job and go please my boss and my team that I'm a very good coworker. But that was it for today. I just wanted to show you a breakdown of the Starbucks Q4 2025 report, show you some ideas about how to analyze the company, so show you some metrics so you can make your own informed decision about whether or not to invest in the company. So I hope you liked the video. Thank you very much for following, and I will see you probably in the